What's up, everybody? Today, I just want to say that there's a lot of nice things to talk about. I'm sorry I haven't been uploading daily. I just got my electricity back after 3 days of no power. So, today's video, we're going to be talking mainly about macro, but I will go over data. But I do want to remind you guys, you know, let's just take a step back, look at the big picture. That's pretty much what macro means, right? Like the macro environment. Things are really crazy in the world. Like these factors haven't been relevant or prominent ever since 2008. And I was like, I wasn't that old in 2008. I think I wasn't even in high school back then. Anyways, I mean the conditions are just terrible, right? Like look at all the price of things that have gone up. I mean the everyday person is hurting, and obviously when that happens, it's never good for markets, right? Like you can't have a good environment like that. And another thing we need to pay attention to, right, is the US dollar. What specifically about the US dollar? Well, let me remind you. So this is the DXY chart. This is just the US dollar versus other currencies, like a basket of currencies, right? And what we see here, if we zoom out, right, the dollar is very strong. Okay, so let's just go over here. In almost 20 years, we're about to break a key. I mean, we've broken a key level, like this region over here. Two times we peaked up here, but we couldn't break it. Now we've broken above it, right? So like the 102, 103 spot. Guys, when this breaks and when it confirms break, I can tell you the US dollar will strengthen, and it's going to cause, as usually what happens when the US dollar increases, right? Asset prices will decrease just because what it's based on has more strength, okay? It's not a bad thing, it's not a good thing, but obviously, you got to be bullish on a US dollar right now. I mean, it's just what it is, right? And why would someone be bullish on a US dollar, right? It's because we need stability, right? In the world that we have right now, supply chain issues, Russia, Ukraine, food shortages, upcoming food shortages. I mean, it's just people want to seek stability, right? Which is why they're not going to speculate or gamble on assets, right? Like why would a family or why would someone bet money on, Bitcoin, Tesla, or anything when they can barely even afford to feed their families? Like just think about that. Like be realistic and be honest with yourself, right? So the macro conditions are terrible for all markets, not just Bitcoin. So just remember that a lot of things, a lot of factors looming overhead that we usually don't pay attention to just because we live in our little bubble. But I'm not here to like check anyone's privileges, of course. I'm just saying that we need to be cognizant or aware of these factors, right? I even made a little notepad, some notes here, right? So yeah, we had the macro issue here, right? US dollar, a lot of geopolitical events. It's literally just not Russia, Ukraine. I mean, there's things like Sri Lanka, like a whole ass country went bankrupt, okay? I mean, I should be laughing, but it's terrible. Like that usually doesn't happen unless there's like something really wrong with the environment, like the world, right? We also have supply chain issues. Okay, I know some of you guys that do live in America, it doesn't matter. Like you guys are still getting stuff that you want, but I mean, when you have to ship things overseas and the ports are stuck and people can't offload, there's gonna be some issues, right? And then inflation. I have a lot of exclamation marks here because inflation affects everybody. And, what a lot of people don't talk about is it affects people at the bottom who don't have money the most. Obviously, people that do markets, they don't give a shit about those people, right? But just let's just put our, thinking caps on right now and say, if the average person is not doing well, why would anyone else do well, right? It kind of has to be like if everyone's doing well, then the people who have more money, they can, expect their, people to spend money, raise valuations, drive profits. That's not happening right now. People are, you know, they just, it's just hard out there. Like, just for example, when I need to go buy my groceries, just 12 eggs, it used to be like 6 months ago, not even a year ago, like 6 months ago, I could get 12 eggs for like $1. Now, if I want to buy 12 eggs, it costs like 320. It's like 300% more higher, and that's just eggs. And I'm sure there's a lot of things that have gone through that. And I mean, sorry, imagine if you're just a family. I mean, that's not something that's it just hurts everybody. And obviously, the people at the bottom, it hurts them the most. It sucks. All right, guys, let's take a look at a Bitcoin, right? I think the last time I made a video 3 weeks ago, let's just look back 3 weeks ago, right? So 3 weeks ago, I think we were pretty much around the $30,000 level. I need to cough a bit, sorry. I think we were at the $30,000 level, right? And we pretty much just fell right through it, right? The bad thing that we saw was we broke the 100 moving average, right? The cyan killer. And I said, once we break this 100, what's likely to happen is we test the 200. Here's what we really need to pay attention to. Everyone needs to pay attention to this right now, okay? This red one is the 200 simple moving average. And right now we're pretty far below it, right? We're about $10,000 below it, $11,000 below it. If we close the week under here, it's not going to be a good sign. What we want to see is we want to see a wick. Like there's, people are buying up, buying up. Right now, people are just not buying. And you can say, does that mean it's a bottom? I can't tell you. I can't predict the future. I just know right now there's a lot of fear. Okay? There's a lot of fear, and there are people that are saying, yes, there's a lot of looming issues even in crypto. We had Celsius, insolvency, right? If they're insolvent because, they've put their money in DeFi and they can't pay back their loans, what's going to happen, right? A liquidation, right? They had stuff on Maker, so there's a lot of contingencies. That's what I'm trying to say, right? It's not that if the price is here, then no one's affected. No, there are people, literally people and companies that are on the verge of going bankrupt because the price can get too low, right? And it hits their liquidation price, right? If they take a lot of risks, if they leverage up, things like that. And one crazy thing about the blockchain, not crazy, I think I would call it a feature, right? Everyone knows where everyone's liquidation price is. Like if you're taking loans on Aave, Celsius, any P2P lending, whatever, all that stuff is on a blockchain, and people can calculate what your liquidation price is, and they will hunt you down. And that's what we're gonna see. We're gonna see this little game being played, right? And these are just like big well games, big company games that they just go on the offensive. It's kind of like PvP, like arena, right? People are just seeking each other out, trying to wreck each other. And what happens is, as the price gets lower and lower, more liquidations will occur. All right, so that's enough about the macro. Let's just talk more about data. Let's talk about more things that are quantitative. Okay, so if you're more interested in this part, listen up. All right, so here's the issue. Again, we are underneath the 200 simple weekly moving average. It is not a good idea. However, there's still about 3 days and 6 hours before this closes. Okay, we're past the halfway mark, but there's still time for this to be brought up. The only thing, right, is the Federal Reserve. I brought macro back in this again. Yesterday, right, they raised interest rates 75 basis points. That's pretty much one of the highest historically in over like 110 years that the whole thing has existed, right? It's very high. What that means is they're going to be quite aggressive, right? And they're actually, they're willing to, throw the economy into a recession. Okay, enough macro for now. But yeah, we see the reaction there, and people say, is it priced in? Well, guess what? Next month, at the next FOMC meeting, there will be probably another rate increase, very likely, right? Because if inflation is high, the Fed needs to control inflation. If I've complained about tripled egg prices, I'm sure there's like beef prices, just basic necessities, right? Like milk, eggs, bread, and all that stuff. If they cannot contain that stuff and it costs a family like 50% of their monthly wage to afford that stuff, people are gonna starve. They're not gonna. I mean, people won't just not be happy. They won't. It's not gonna be pretty. So they need to reduce inflation. And how do you reduce inflation? Very simple. In our universe, in our world, you have to increase the interest rates, right? You have to make it cost more to do business. All right, sorry. That's the last bit about macro. I swear. Right. So yeah, we are seeing next month there's gonna be another meeting. Every month they have an FOMC meeting. And they're going to talk to each other. They're going to review the data, and they're going to say, are we going to raise interest rates, or how are things going, right? If they see that the economic, numbers show that inflation is still increasing, right, through the different metrics they look at, I won't go over them, they're going to raise rates, right? So don't be surprised if we get to, like, double-digit rates. Who knows? All right, I'm seriously just gonna talk about the data now for Bitcoin. Okay, so as you guys can see, right, I got a lot of these blue lines, and a lot of these blue lines do not act as support. So what does that mean? That's right, baby. They will become resistance. And one of the biggest resistance that we're gonna have to face is the $30,000 level. Sorry, over here, right? So $30,000, and you're like, what? Why $30,000? Well, let's just go back, right? Go back a little bit. Looky over here, right? So we had this area over here, right? Look at all these wicks here at 30,000. So remember, this is also a weekly chart. I would like to remind you, okay? So each candle is a week. We had a lot of time spent over here, right? Which means that we also spent quite a bit of time over here, okay? And what happens is previous support can become resistance. It usually does 90% of times. What does that mean? That means if we get some kind of bounce, some kind of we're gonna bounce, we get to this point, you know what people are gonna say? Guys, the bull market is back. We're gonna go to 100,000. No, guys, no, that's it's hopium. That's not likely to happen, okay? What's likely to happen is we get to 30,000, people are saying, wow, I need to get out of this market. I need some money. Things aren't looking too good, and I'm probably gonna sell. People will fade the rally, which means they'll sell it, right? So be on the lookout for that. I am expecting some bounce to occur. I don't know when. If you know when, let me know. We can make a lot of money, but no one knows exactly when it can happen. But I do want to go over one thing for you guys is when there are high periods of volatility, we can look at this better on a daily chart, right? When there's high periods of volatility, right? When there's big moves happening, like big move here, right? Big move here, okay? Big move here. We get something called a consolidation, which is like a crab market, right? It just goes sideways. See these big moves here, right? If you don't believe me that they're big because you're not paying attention to the prices, that's okay. I'll measure it for you guys. There's a 30% move here, 20% move here, 30% move here, right? 30, whoa, 30, I think that's 34%. 34% move, right? Those are big moves, okay? So after a big move, what is usually likely to happen? So I need to go back to my daily chart. That is right, we get consolidation. And consolidation, as I said, right? We're just going to go sideways. We're just going to have fun going sideways, right? Big move. We're just going to have fun going sideways. We're just going to have fun going sideways. How long do they last? Well, no one really knows, but let's just take let's measure it, right? We love to measure things here, right? Here is about 26 days of just going sideways. Here is about 72 days of just going sideways. Here is about 30 days going sideways. So you're probably saying, hey, is it going to be 72 or 30 days? Well, we can't, just having 3 data points doesn't really tell us. But what we do see here is it does trade within a range, okay? And how do you identify a range? Well, pretty easy. You're just looking for levels that it could trade off. And based on my eyeballs right now, if I had to put a range for what the consolidation could be, I would probably say around the $20,000 level, and then let's just take it to the bottom of this channel, right, or about 30,000, right? So somewhere around these two areas, we just see this, right? And don't be surprised if that happens for a month, okay? And then after that happens, we can see, is it likely to break the level, right? Are we going to break 30K or are we going to break 20K, okay? So that's what's likely going to, that's, in my opinion, what's likely to happen, right? So I just did analysis for like a month, so I hope that should help you guys. I don't know when exactly this plays out, but again, remember, it is likely just to consolidate for the next month, maybe 3 months, who knows, right? I don't think it will consolidate for 3 months, but who knows? It's usually at minimum at least a month of just going sideways, and we could be seeing the early stages of that. There is one thing I do want to talk about, and I know a lot of people have asked me about this, is Bitcoin dominance, right? Just because if Bitcoin dominance is low, or quote-unquote low, does it have to go back to 60%? Let's just take a look at the data, okay? So it's going to help us if we go into a weekly chart. So please remember this is a weekly chart, okay? So I'll just outline shit for you guys right now, right? Here, this is when Ethereum was released, okay? sorry, not Ethereum. This is the ICO craze. Ethereum was released back in like 2016, 2015. I don't know exactly the time, but this is the 2017 ICO, pretty much like when I entered, right? And we saw a lot of these projects that are pretty much, they all were birthed from Ethereum, okay? And historically, what we've seen, okay, so let's just zoom in. Historically, what we've seen is this 60% range. So let me get my, boom. Okay, let's put this out. Wait, that's not the right one. Scanned myself. I need the one that like shoots across the whole. Okay, whatever. We'll just use this one for now. All right, so the 60%. I just marked out the 60%. So this is about the 70% one, right? As you guys can see, most times, right, we get low, like 36% we hit for the 2017, 2018 bull market, right? And then you guys saw what happened, right? We hit low and we came back up to about 71%. Go down, come back up, we're at 71%. We're down, right? This is 39, very close to 30. It doesn't have to go exactly here. Go down. But what is likely the next direction? Just, simply put. Obviously, it won't be a straight line like this. I'm sorry. Let me redo it. For the people that really care about this. I mean, I care, but it's probably gonna go like something like this, right? And then maybe, something like that, right? It's not gonna be a straight line, okay? But overall, I'm expecting Bitcoin dominance to get back up to 50, 60, 70%. No one exactly knows how high it can go, but as again, the extremes is usually about 7%. What it means is altcoins will start to bleed out, right? People don't like me using that term, but things won't get pretty for altcoins. What that means is, the ETH BTC pairing likely to drop, right? Like over here, we saw it less than 1% of a Bitcoin, right? Over here, like currently we're at about 5% of a Bitcoin. So yeah, 5.2% of a Bitcoin. And look at here, 200 simple moving average. It's about 4% of a Bitcoin, right? So how far do we have to go to get there? Let's take a measured move. Again, please remember these are all relative, and just because I measured these out doesn't mean it exactly has to go there. So it's about a negative 22% drop in dominance, right? Not in dominance, sorry, in a ratio, okay? So so imagine your Ethereum, if you had this roughly, 20 Ethereum or 18 Ethereum would equal 1 Bitcoin. Well, that 20 Ethereum or 18 Ethereum might only equal 0.8 Bitcoin once this move finishes, right? So just imagine minus 22% of worth relative to Bitcoin. It's not a good sign. And yes, it pretty much translates directly to Bitcoin dominance, right? But remember, Bitcoin dominance is all of the altcoins combined, right? So you got ETH, ADA, Matic, Luna, or sorry, not Luna anymore, but anything else, right? Any other coin that has not Bitcoin does fall into the altcoin category. And my God, you see these tokens just bleeding harder than Bitcoin, and it's likely to keep happening like that, right? Like you see Bitcoin here, very simply put, negative 6%, Ethereum negative 10%. Altcoins, 90% of the time, 99.9% of the times, they will move harder, more brutal than Bitcoin. And that does mean downside moves too. Usually it does. That's why I said altcoins are risky. Pretty much you just gamble on them, right? They're like Bitcoin with leverage, right? But yeah, anyways, let's take a look at my notes to see if I forgot anything. No, I think I went over everything here. But yeah, please guys, you need to pay attention to macro. Again, these times are, I think, worse than they were in 2008. Okay, just the environment overall. There's just so much looming overhead, and if you need a reminder, right, pretty much the U.S. dollar is going up. There's a lot of geopolitical conflicts, not just Russia, Ukraine, right? There's a lot of things that are probably going to be uncovered in these bear markets. Supply chain issues, right? I don't need to elaborate on that. Inflation, just literally every single thing, every single price is going up. Why? I don't really need to explain it, but like if gas prices go up, everything needs to be transported, right? So, things just don't teleport to your store or your house. Someone has to drive it there, someone has to get on a train, or someone has to transport it from the seaports to the store. The price will go up, right? So, yeah. And then lastly, just a lot of uncertainty in the markets, right? Bitcoin dominance, I just talked about that, and then Bitcoin's possible move, we talked about that, right? We're expecting like consolidation probably for a month, 3 months, just bouncing within a range of 20,000, 30,000. I could be wrong and we just cracked through 20,000, but I don't think it's likely just because we had a huge move recently. We had a negative 34% move, and it's likely that we're just going to start bouncing around, testing things out. But if you guys want to support the channel, make sure you hit the like, subscribe, and then I also added some show links on there if you guys are interested. Please, if you're a U.S. citizen, do not click on, or you can't even use these websites, don't use them. But again, would like to remind you guys, if you do anticipate to use these sites, they're very risky. You probably will lose all your money. Again, all my content is free. It's educational, it's informative, and none of it should be taken as financial advice. Thanks for listening to and watching my analysis. I'll catch you guys on the next one. Take care. Bye-bye.